Hey guys, what is going on? Welcome into the video. So market volatility continued this week as the S&P had its first 2% plus down day in more than a year. In this video, we'll be going over what to expect in the week ahead, including the top trade and dip buy ideas that I'm watching. As always, there are timestamps in the description, and let's go ahead and get into it. So starting out by taking a look at the S&P futures chart. In last week's video, we went over how the S&P had gotten oversold, and because of that, we were expecting an early week relief bounce. We also went over the key pivot levels to watch if that relief bounce played out, and a reclaim above 55.85 could act as the upside trigger to target 56.30, which was the key pivot level. 56.30 is where the breakdown started from, so it then becomes key resistance and the level that buyers must reclaim above to trigger the failed breakdown and open upside back towards highs. What played out this week was textbook price action to start out. The S&P got that relief bounce, it rallied up to 56.30 exactly, and rejected that as new resistance. So this is a backtest and rejection off the range breakdown trigger, and in result the market got a violent sell in the day following. And after this large sell, the S&P built out a volatile chop range to close the week. So now going over the outlook and what to expect from the market in the week ahead, and we can now say pretty firmly that the market is in a short-term downtrend, and downtrends will continue until a key breakdown level is reclaimed as new support. There are two major resistances to watch from here, and the first makes up more of a zone and where the violent sell started from on Wednesday, and that's at 55.60 to 55.85. Above there is 56.30, which of course is where the initial sell started from and backtested as resistance this past week. A reclaim above 55.85 can trigger upside once again to target 56.30 next above there, and above 56.30 can send it back towards highs. Though a short-term downtrend is now established, and because of that we have to expect that the market is in sell to bounce mode until proven otherwise, and if 55.85 is not reclaimed, expect further downside to play out. So the key support below in this week's lows are at 54.33 to 54.53, and 54.33 is the current double bottom. Breaking below there would trigger further downside and can target the next levels below at 53.88 to 5400, 53.73, and 53.50. And because the market had such a large move this week, it would not be surprising at all to see more of a slower week where it's mostly consolidation in the week ahead. So now getting into the top trade ideas that I'm watching in the week ahead, starting out with Tesla stock, ticker symbol TSLA. So last week we talked about the major patterns on Tesla stock and the levels of interest for a potential dip buy. And this week we got that dip as after earnings it gapped down more than 10%, and this gap down resulted in a break below the long-term trend line, which has continued to act as the key pivot for the stock, as once it failed below, it is held as strong resistance while backtesting it so far. The key 200 to 207 zone is slightly below here now, which was the breakout zone from early July, and also now lines up with both major moving averages. This will be a major support if tested, and a big spot of interest for a potential dip buy if it gets there. A simple way to play can be to look for an entry from that zone on a reaction from buyers. It can be tradable with a stop loss back below 200 to keep risk low. The ideal scenario from here that I'd be watching will look something like this, where it gets a strong reaction from buyers at that support zone, and then a reclaim above the trend line can act as the upside trigger above. Or something else to watch would be if it's able to reclaim back above the trend line first, it could be playable with a stop loss back below the trend line. And upside targets, if it's able to reclaim the trend line, would be the gap fill from earnings and then the key 265 level next above there. Another setup to keep on watch in the week ahead is Nvidia, ticker symbol NVDA. So for the past 2 months, 115.8 to 118 has acted as a key pivot zone for this stock and has resulted in strong reactions off of it. This week it broke down from this zone, resulting in a violent sell along with the market, and also has bounced and backtested it as new resistance with a rejection so far. So into next week, this zone will continue to be key to watch and the area to initiate trades from. If it continues to hold below this zone, it sets it up for continuation lower, which can be a short trade and target a move back down to 110, 106.3 to 106.9, and then 101.55 next below there. If it was to reclaim back above 118, that would be a failed breakdown and trigger upside, with the initial targets above at 121.8 and then 125. And Nvidia is a stock that will likely continue to trade in the direction of the indexes, so it would be important to watch the S&P and Nasdaq as well with this. Visa stock, ticker symbol V, had a large drop this past week, which is uncharacteristic for the stock. Visa is a lower volatility stock, and stocks like this will often hold up best during market volatility. So 250 to 252.7 was a multi-year key resistance that it broke out above in late 2023, and this week's drop resulted in a backtest of this zone as new support. This is a very simple backtest setup that has reacted well so far and is likely to strengthen up even if market volatility continues, as long as this support zone holds. If it holds, the stock can set up for continuation higher after the successful backtest, and the initial resistance and target levels above would be the 263.7 gap fill, and then the 200-day moving average currently at 266.41. And above there, the stock can see larger upside as well. And another very simple backtest setup to watch is with New Holdings, ticker symbol NU. So similar to Visa, the stock is backtesting a well-defined long-term resistance level as new support at 12.24. So 12.24 was the high when the stock IPO'd in late 2021 and acted as key resistance for most of this year before it broke out in June and is now being backtested as new support. Along with this key level, it also lines up with the 50-day moving average, making the support that much stronger. A simple way to trade this can be to enter with a tight stop loss back below 12.24 to only risk 1 to 2% on the trade. And if it was to break below, I'd still keep this stock on close watch as it has shown major strength. And with 12.24 such a well-defined level, that can be the level to re-enter on the stock on a reclaim back above it. So that is everything that I'm watching for in the week ahead. Expect market volatility to continue unless one of those key breakdown levels are reclaimed back above. For anybody interested in joining the private Discord chat, that's the first link down in the description. Take my personal trade alerts, nightly watch lists, and I answer any questions you have in there. Thank you guys for watching. I'll catch you next time. Good luck trading the week ahead, and peace out.